So we are good to start. Let me welcome you all to this final round of the knowledge competition 2025. Today we have gathered for the final rounds of cards domain, where we have got participants from green belt as well as black belt. Just for the interest of the audience, just give me a second, please. I'm just getting an echo. Yeah, really sorry for that. So, just for the interest of the audience, let me little bit talk about the structure of the event, and then we will actually proceed with the event. So we have got 4 finalists today from green belt as well as black belt. They have already gone through a couple of rounds. First round was their test, which was an MCQ based test. In the second level of qualification, the semi-final round, they have gone through MCQ based test, plus they had to answer one subjective question. And out of that, now we have got finalists here in the two groups, green belt and black belt. They were given 4 different options of topics for presentations, out of which they have chosen their preferred topic of presentation. And each of the finalists will be presenting for 15 minutes, after which it will be followed by the question and answer session from our jury members. So that is the structure of our event. And they are going to get scored for 30 marks. So 10 marks for their presentation skills, 10 marks for their conceptual clarity, and 10 marks on how do they respond to the question and answer session. So that's our structure of the event. Now, before we begin with the presentation, I'll request my colleague Kritika to formally introduce our esteemed jury members, and then we will start with the presentations. Over to you, Kritika.
Good morning and good afternoon to one and all. My name is Kritika Ayajit and I am one of the coordinators for this knowledge competition. On behalf of MVLGO, I would like to welcome our esteemed jury members to this event. We are delighted to welcome Mr. Sriram Kannan as a distinguished member of our jury panel. Mr. Kannan is APAC Head Global Cards and Payments at Capgemini. He leads the global delivery operations and supports go-to-market strategies. He is actively involved in building centers of excellence for digital payments, enterprise payment, and liquidity management areas. He provides his thought leadership by being a key part of the committee responsible for releasing the highly influential World's Payment Report of Capgemini released annually. He is a senior technology and delivery leader recognized for his extensive career in global banking, specializing in building high-performance IT capabilities and generating IP-driven revenue streams. His deep domain expertise covers the full spectrum of enterprise payment hub solutions, card payments, real-time payments, cash management, trade finance, and open banking initiatives. As a proven organization builder, he has built global solutions with distributed team of 500 plus resources at Capgemini. In his past roles, he has successfully delivered digital transformation with global distributed team at HSBC and was also part of core banking replacement program across 9 countries at American Express. His extensive expertise ensures that he can evaluate our finalists on their strategic vision as well as their understanding of technological abilities. Welcome, sir.
Thank you, Kritika. Hi, everyone.
We are delighted to welcome Mr. Chandrasekhar AKNR as a distinguished member of our jury panel, a top leader who has spent over 3 decades guiding organizations through digital transformation. Mr. Chandrasekhar AKNR is the Executive Director at DBS Bank, responsible for IT strategy, implementation, and technology transformation programs across credit cards and unsecured lending for Singapore, Hong Kong, Taiwan, Indonesia, and India. He also evaluates fintech firms and financial institutions to expand lending reach and offerings in India. He is an expert in creating technology plans that modernize business and build better connections with customers. He has pioneered workforce strategies like the core competency model and engineered engineering scorecards anchored in resilience, scalability, and stability. He has set up new global teams managing large multi-million dollar budgets. His leadership is focused on his teams using transparent, people first approach to help them grow. Prior to DBS Bank, Mr. Chandra held a leadership position at ANZ. He was a technology leader responsible for the delivery of key platforms including cards, core decision system, and retail lending, with a core focus on creating unified workforce and delivery strategy. His depth of knowledge in both technical complexity and strategic execution of banking platforms make him an ideal judge for our finalists. Welcome, sir.
Thank you. Thanks, everyone. Thank you, Kritika, for your kind words. Thank you very much. And wish you all the best to the contestants.
Thank you so much, sir. And let me also welcome both of our jury members. I think let's get started with our first finalist. Our first finalist is Subhrajit. Subhrajit, are you ready? Can we start?
Yes.
So Subhrajit
Sure.
is from the Green Belt Group, and he'll start his presentation. Subhrajit, you can start sharing your screen, and I'll start the timer as well.
Sure. Just a quick check. My voice,
Yes.
audio, video, and the screen sharing is enabled,
Yes.
right? Properly? Okay.
Yes, you can
Okay.
start.
Yeah, I'll just start now. Yeah. So, good morning and good afternoon, esteemed judges, MVLCO team, and everyone else present over the call. Today, I'll be presenting on innovation in card payments, which is shaping the future of the digital transaction. I'm Subhrajit Paul, and I work as a senior technical business analyst. I work as a senior technical business analyst. Can you hear me?
Yes, you are audible, Subhrajit. Go ahead, continue, please.
Yeah.
Okay.
So yeah, I work as a senior technical business analyst in cross-border payments. So starting with the tagline, so the innovation in card payments can be tagged as transforming transactions and redefining commerce. The card payments has gone through a lot in the past years. So let me transition to the next slide, and let's begin by looking back at how card payments have changed over time. So I have termed this slide as from plastic to pixels, the changing face of card payments. And I'll discuss about the era from 1950s to the recent times. So the 1950s to 1970s can be termed as the birth of card payments, where we have seen the Diners Club paper charge card was introduced in 1950s, and then in 1960s it was the magnetic stripe cards and the creation of global networks like Visa and Mastercards in the 1970s. So this era laid the foundation of electronic payments worldwide. Moving forward, it's 1990s and to 2000s. So it can be termed as the security and standardization. The EMV chip and PIN standard were introduced in 1990s, and also due to the boom in internet era, the e-commerce took off, and card payments led the digital commerce boom. With the rise of internet, cards became the engine of e-commerce, supported by 3D secure and online payment gateways. Mobile and contactless revolution started in 2010s. In that era, in 2010s, we have seen EMV chip and PIN standard go global, flashing frauds by making card harder to clone. And we have seen contactless NFC payments and mobile wallets like Apple Pay, Google Pay became a mainstream payment process. Today, about 25% of the US card transactions are contactless. In 2023, we have seen this trend that most of the US card transactions have become tap to pay. This shows how from carrying a physical card, how rapidly the user behavior can shift towards new payment methods. Understanding this timeline helps us see why new solutions have emerged. Let's examine in the next slide the main challenges that drove this innovation. Fraud and security risks. The rise of data breaches, scheming, and identity theft have in the recent time increased, and most of the fraud attacks have used AI and related technologies. Due to this, there has been a need for stronger authentication. So technologies have improved, like EMV chips 3S 2.0. Now the latest has been 3DS 2.2, as well as biometric cards and tokenization. I'll visit over these technologies in the upcoming slides. Then next is the poor user experience. Manual entry, failed transactions, and slow checkouts frustrate the customers. And that's why the push for contactless mobile wallets and on one-click payments. There is a cross-border friction as well, due to which the card payments are less used in the cross-border landscape, which are high fees and high interchange fees, slow settlement times, etc. Innovation in network interoperability and real-time processing is required. Merchant cost pressure, high interchange fees, and fraud chargebacks due to card not present frauds have hit small merchants. And this has led to fintech-driven alternate rails and embedded payments. There has been a regulatory push as well, like open banking and PSD2 in SEPA region, as well as there has been a competition from buy now, pay later and UPI like API from India and Pix from Brazil. Moving to the next slide, we'll see what are the innovations that we have seen in the recent times in the card payments industry. We have seen the biometric cards. We have seen tokenization, smart wearables and payment rings, virtual cards, BNPL-enabled cards, and crypto-enabled cards. I'll go over on a high level and a bit low level on few of these innovations. Before that, I'll just go through a few of the data from the card payment industry. So you can see in the left-hand side top, it's the card payments volume versus value growth. And blue marks the transaction volume in US dollar trillions. In trillions, and transaction value is US dollar trillions. And the data for 2023 and 2024 are the historical data, and 2025 are data based on this year's latest trends, and 2033 is based on the research. So payment cards industry is supposed to grow from 28.6 trillion US dollars to 56.4 trillion US dollars. Also, we can see the card payment share has been a bit declining though, but all the relevant other innovations like the digital wallet and contactless share has been increasing. So we can see the technology-driven growth in the card payments. And technologies include biometric cards. So Visa, MasterCard, and major banks are piloting fingerprint authentication, moving from pilot mainstream issuance. Tokenization has in US retailers have been seen around 70% of adoption, used to secure card not present frauds that I have already explained, and then Crediverse for the e-commerce trust. Virtual credit cards is the technology which has shown the highest growth at a CAGR of 13.5% from 2023 to 2025, and is expected to be the fastest growing issuance model. Fraud detection tool are currently using AI and ML based defense systems. Credit card verification system has seen a growth. Services has seen a growth of around 55% merchant adoption. 3D Secure 2.0 CVV checks and address verification, improving CNP security. AI-driven fraud prevention has prevented around $10 billion of fraud in 2023, and it is going to increase with the technological innovation in AI-driven fraud. Yeah. Moving to the first technology that we'll be discussing with is the biometric payment card. So a biometric payment card is a credit debit card with a fingerprint sensor on it. When you tap or insert it, it instantly scans your fingerprint and unlocks the payment. In practice, the cardholder registers their fingerprint when the card is issued. And from then on, the card recognizes its owner. So it can be termed as your fingerprint is your PIN. The process flow is enrollment, card issuance. Financial institution will register the cardholder's fingerprint and do all the verification and securely store it. And then during the future authentication, whenever the card is used, the user can directly use this fingerprint and no PIN will be required. So the key benefits are the PIN-free security. So for older people, it is, and also some other like disabled or any other vulnerable category, it can be used as very secure and ease of usage. And next is the enhanced fraud protection. Since you need to be present to give your biometric, it increases the security. Offline capability, verification happens on the card, so no network dependency is required. It is inclusion ready and helps non-digital users who keeps on forgetting the pins and the card numbers. They can use this with ease. And we can see the global adoption here. Let's close this slide with a quote: the card that recognizes you, not just your number. Moving to the next innovation, it's the tokenization. Tokenization replaces the sensitive card data with a unique randomly generated token. Each token is device merchant and transaction specific, making it far more secure than traditional card details. Process flow, first is a generation. The token will be generated based on the card details. The real card number is replaced by a token by the network, like Visa, MasterCard, RuPay, etc. And then the token and cryptographic keys are securely stored in the device or cloud. During payment, only the token is transmitted, protecting the actual card number. Key benefits: enhanced security, frictionless payments, as it enables tap-in and online payments. Reduced fraud. Tokens are useless outside the original context, and it reduces fraud since the tokens cannot be used in future, like even in future transactions if the context is missed. Future ready, supports emerging payments like IoT wearables and in car payments. We can see the global adoption via MasterCard, Visa, Amex, and NPCI. And merchants in US are using over 75% tokenized for tokenization for online transactions. India rollout in RBI has mandated tokenization already in 2022. Protecting every transaction without ever revealing the card is the quote. Other emerging innovations are smart wearables and payment rings, virtual cards, buy now pay later enabled cards, and crypto link cards. So all are based on the recent innovations related to technologies. So I can close this slide with a quote: from wearables to Web3, the future of card payments is smarter, faster, and more connected. Now the key risks and roadblocks related to the innovation are security and fraud. Card not present fraud and phishing scams have increased in the recent years. Skimming, cloning, and synthetic identity fraud. Data breaches at merchants or third-party processors. So all this slows the innovation related to card payments, because then innovation would be required related to handling frauds and then the other compliance related stuff. Technical and infrastructure constraints, legacy mainframe systems at issuer and networks, limited API standardization, and outage and outage are the key risks here, and roadblocks are high modernization cost for banks and PSPs due to all these risks. Lack of real-time processing capabilities. Regulatory and compliance are due to more as frauds and other risks increase, more regulations are put by the regulators, and due to this, more time and efforts goes into compliance. Customer trust and experience due to frauds and other like friction, user fatigue has been seen to use the card payments as a transaction medium, and roadblocks are the limited education on digital card safety, weak grievance redressal systems. Merchant and acquirer challenges due to high fees uh, and non card not present frauds affecting small merchants, less acceptance is seen. Fraud liability disputes between merchant and issuer, costly PCI DSS compliance. So that's why slow onboarding has been seen. Innovation adoption and ecosystem readiness, low readiness for biometric and tokenized cards. So the ecosystem would need to be ready before we can absorb these innovations. Moving to the last slide, the road ahead, 2027, we can see the Digital Trust Foundation. And all these technologies that I've explained are going to be used more by 2027. 2030, we see the intelligent convergence era where AI and related blockchain, etc., will merge with the card payment innovation. And 2035, we can see the autonomous payment identity era where the identification of user and acquirer is done without any friction as well as invisibly. So I'll stop with the quote saying the cards won't disappear. They will evolve into intelligent, invisible layers of digital identity. Here are the research and data sources I have used, and these are the limited ones and the primary ones, and anyone can scan this QR code to find to refer to the links for all the data sources. Thank you. I'll stop with a quote. Innovation in card payments isn't all about replacing what exists. It's about redefining customer experience. Thanks, everyone. And thanks for being with me with my presentation. Happy to answer your questions coming up. Thank you.
Sriram, will you go first or
No, please go ahead, sir. I can
or
start.
you go first? You go first, and then I will. That
Okay.
will make it as this thing. Yeah.
Sure.
Yeah.
So thanks, Subrajit, for your presentation. So I noted in one of the slides you had mentioned about the cards versus wallets. I think it was in your slide related to the metrics decoded what the data reveals, right? So just a question around it. So what do you see in terms of payment mix versus cards versus digital wallets and contactless payments? Is there a threat to cards because of wallets and contactless? There is a trend that kind of demonstrates the volume shifting towards wallets and contactless. So how do you see that might impact the cards business itself?
So what I can say is it is a threat to the physical usage of the card payments. Like in future, the physical card usage would maybe a bit reduced, but we can consider the contactless payments as well as a card payment itself. And digital wallets will increase, and I can why maybe digital wallet shares are increasing is because it gives the ease of usage for the customers, And also, I think right now globally, and the charges are quite less compared to the credit card payments. But I would say all of these will coexist even in the distant future, and maybe the physical card usage would reduce. But I would say the contactless technologies will increase, like the the smart bands, etc. Smart bands, then NFC based payments, etc. will increase. Though the back end of it would be based on the card itself, the credit or debit card itself.
Okay. Maybe one more question around the players in the market today in the cards context. We have typically the issuers, acquirers, and banks,
Yeah.
but there is a lot of fintech playtech play in the space. So how is how do you see the balance shifting, based on the trends that you mentioned about and the innovation that's driving, and that typically is a tech play, and paytechs probably have an advantage. So how do you see revenue models are impacting current way of operating versus the innovations that are coming through? How that will impact the way business is done going forward?
Yeah, so the acquirers and the networks like the existing banks and Visa, Mastercard, RuPay, they will be definitely holding a big chunk of share of the card payment industry. But as soon as the technology grows, like more decentralization comes into the picture, I guess fintechs will have a better prospect, because innovation-wise, I think they have more to offer. Maybe since the data standardization is happening maybe through ISO 20 or 22, not maybe using only in cards, but I see more standardization. When we have more standardization, more richer data, I think the fintechs will be able to use it properly and to offer more features and like distinguished feature which the banks might not offer. And so that's a competition for the banks as well. And I guess banks will also try to cope up with the fintechs from an innovation point of view. And I think it would be very great for the consumers on a whole, because such healthy competitions will reduce the charges, streamline the total time taken for the global card transactions, etc. And
Any specific examples you want to call out, of paytechs or, somebody that has caused a disruption, which is already being taken note of, or it is impacting the way, the large players are already doing business? Any specific examples you would like to call out?
I am not able to totally recollect the exact example, but I can see like there are various AI related fraud detection fraud detection startups which are coming up, and then for blockchain based payments as well. There are organizations like the startups who are coming up with the chain analysis, as well as for like there are technology driven startups which are coming up with the biometric and biometric based payments, and they're featuring different maybe one for a very broader example, I can say Google Pay, Phone Pay, etc. They are giving QR based card payments, and then now now even they are using tokenization, so that the data the QR based payments are also linked to the debit or credit cards. So such examples I can recollect right now.
No problem. Thanks. Chandra, over to you.
Okay, thank you. Thanks. I have a couple of questions. I'll go with the first one. Okay. You, on the
Sure.
same slide, you have biometric and tokenization.
Yeah.
From your particular understanding about these two technologies, which one you think that will continue and it will be more predominant?
I
And
think
do you
biometric.
think that one will replace the other?
No. I think definitely these two will coexist. I can compare tokenization versus virtual cards, where
Tokenization versus biometric cards.
no, I'm saying biometrics and tokenization will go hand in hand because we'll need both of these together because biometric card would be like providing ease of use for the customer so that they can use their biometrics. Maybe in future the other biometric details we can capture and use it. Right now it's mostly fingerprint based, and tokenization, what it does is it through the network when we send the data, it uses the tokenization rather than the actual card details. So I think these two will go hand in hand and help us reduce fraud as well as streamline the process because it would be like with adoption of AI, it would be easier to process the tokenized payments. So these two will go hand in hand, and I don't see these two as a threat to each other.
Okay. But don't we see that once we have a biometric card, do I still require a card number?
But see, biometric will replace the PIN that we give, but still we'll need some data related to the card. Biometric is replacing the PIN or the authentication part, but for the authorization, the card details would be still required. So replacing the details, we can use the tokenization as part of that.
Okay. Yeah. My next one is about you touched upon the blockchain based cards.
Yeah.
Okay. Do you see there is any role which MasterCard, Visa, and all these schemes can play in a crypto-linked cards? What do you see as your own analysis?
What I can say is, see, crypto-based cards will be definitely decentralized, and it will be blockchain-based. They will not be as a, I guess, network providers. Definitely, maybe they can definitely provide the blockchain-based network. They can come up with blockchain-based network, but I think their role will not be limited to a processor or network in crypto linked cards. I think they would be required uh, to assume a bigger role, like related to um, acquisition of payments. Maybe the end to end. Maybe if they can come up with the end to end of crypto linked payments, then I think still they will be in picture for the crypto based payments. So starting from acquisition of payments and then technologies related to fraud check and also analyzing the actual stream and seeing like whether the and like mm, routing it to the end beneficiary. So if they can come up with the whole end-to-end process for it, then I think they would be in picture for the crypto link cards.
Okay. Thank you very much. Right.
Thank you so much, Subhrajit, for your interesting presentation.
Thanks, judges. Thanks, Amay. Yeah.
Let's now move to our second finalist, Rios. So Rios is from Black Belt Group, which is the senior category. Green Belt is the junior category, and Black Belt is the senior category. Rios. You're on mute, Rios.
It's visible now?
Yes, I can see you. Can you start sharing your screen, please?
Yeah. Yeah. It's able to visible the screen?
No, not yet. Yes, now it is.
It's visible now.
Yes. So you can start yours.
Yeah. I'm Riaz. I'm having 16 years experience in the cards and domain industries. So I'm having multiple roles in my banking and my technology perspective. Organization, which is the innovative way of the digital digital way of the payment, which is existing in widely existing in the card domain industries. So the EMV tokenizations, which is mainly using for the security process, which is used in the digital card, which will be replaced with the PAN numbers. It's called primary account number, which can be replaced with that unique the payment. It's not even use it on the outside to say any security violation purpose or the data breach. So this token is the wallet, which is the token, the payment token, which is the very safe way of the communicating, interacting between that all the entities, which means the banks and the card schemes and payment network and also the customers. So it's a very secure way of using the tokenizations part in terms of using the real cards data and the PAN numbers in the bank perspective as well as the consumer perspective. The main purpose this one to protect the card holder data and also reduce the risk in the digital and the mobile transactions, especially in the contactless transactions using the wallets and also the transactions which are occurred in the e-commerce transactions. So these are the major the milestones and also the purpose which we are using for the EMV tokenizations. And we are going to replace this sensitive data with the non-sensitive data, even though the compromised this non-sensitive data is compromised without the relevant the technologies and the relevant entities which cannot be retrieved to use this the token to hack or the breaching. It could not be happen in terms of the token part. So mostly from example, the tokens which have the PAN number, which are having the 16 and 13 characters numbers is based on the PAN number, which can be tokenized the unique tokenized attributes like sometimes it will go with alphabetic characters and second maybe the numeric characters, or it could be the combination of the alphabetic and the numeric characters. So these are the example which I show that how the tokenizations the real PAN will be replaced with the payment token. So how it works in the payment whole the structure of it's a high level of how it works in the card and the payment which occurring between the end to end. When the card is registered in the wallet, example, the mobile wallet or Google Pay or Samsung Pay or Apple Pay, the card is digital. The card is registered in the digital wallet. The token, which will be TSP, which is the entities which generated the token, that maps to the real card number. If this token is stored on the data, or we can use this data, the token, the value which is used in the merchant sites, it's like e-commerce websites, which we can use this the data also in the merchant system instead of using the actual PIN. And once the customers or consumers initiating the transactions, the transactions which initiated to the token value, which not real PAN, into the networks with multiple networks except the issuer banks. The TSPs will be the part of the two the major the play over. One is the tokenized and de-tokenized. When it comes to the initiation part, it will come part of that like tokenized transactions. When it comes to the transaction perspective, the issuer wants to know that real PAN, which means be de-tokenized will happen in the back to original PAN number, and then after this completion, the transaction could completed in the whole side. Second, what are the key players we are using in the key players in this whole end-to-end payment in the part the card industries? It's like card networks which may international card schemes like Visa, Master, or JCB, or Union Pay. These are the main American Express. They are the main card schemes, and also EMV co, and also issuer, which going to issue the card, and acquirer, those who are processing the transactions, the merchant that consumes the products and consumes the services, and digital wallet is the front end, which will be facilitated to proceed that kind of using the token part. The benefits I explained already in the previous my slides. The actual reduce the explore of the actual data and minimize the risk. This is the main objective of to minimize the risk, and also enhance the security way of the transactions, especially when contactless transactions, because comparatively to contact and contactless transactions, the contact could have the more the validations in completion of transaction, but contactless comparatively to contact, it is the less validation. So which we use to this actual the non-sensitive data, which will help us to avoid the frauds and the breach, the reduce the mitigate the risk from the customer side, and all the entities those who are involved in this payment, enhance the security standards like PCI and DSS security. This is the one of the way to achieve this the standards from our side. So this is the basic architectures. The transactions, which is the basic architecture. The token is requested by the token services. The token services will be generated to the token services, and will the issuer, and it could be completed instead of the real PAN number. Obviously, that could replaced with an actual it's a dummy characters or non-sensitive data characters. It's the main features of the token, which the same card could be used in the multiple channels, which we can use it. Like we can use it in the phone, we can use it in the watches. It's the smart watches, and we can use it in the cars using the toll gate and using the merchant side. So same card could be used in the multiple channel of tokens we can use it. The same card could be used with the multiple. Each token also we mapped with the respective kind of services which we can use it for our side. So types of tokens, it's mainly we have 3 types of tokens. One is issuer token and acquirer token and EMV token. Acquirer token, which is mainly used between the merchant and the payment processing system, and issuer token between the issuer and the card scheme, and EMV token it widely across to use all the entities used it. These are the one. The transparent could be for merchant and acquirer only, and the issuer token is issuer only, and the EMV token transparent to all the parties. This is the main features of the financial institutions mainly used card schemes. The card, those who are issuing the issuer card will use this kind of processing system, and acquirer and the payment processing. These are the main financial institution using this, the EMV tokenization part. And a non-financial part, TSP, which is a non-financial entities which managed by the token life cycles, and merchant and retailer also use the tokenize requesting the tokens and then accepting the token payments, the merchant side, and the wallet which will be acting as a token requested and secured the devices, and the EMV which is setting the standards and managing to achieve that PCI compliance part. So these are the financial and non-financial could benefited of the EMV. Token lifecycle management, which we have the multiple times of the cycle which we have. So issuance and expiry, that delete or suspended based on the customer's request and the bank request. So we can use the multiple life cycles in the token itself. And token processing, I'm directly getting into the pictorial part. The cards holder will provision the card, then token requester will token the TSP, and the TSP2 will generate the token and send it to the issuer. Issuer will do the authentication through their OTP or transaction, complete the card provisional part. Once it is done, automatically the token will be, the real PAN could be replaced with the token payment tokens. This is the token initiation part, which I already discussed. This is the brief technical part of who requested what. Mainly one more point I would like to add, that ID and V, which means it's identification, and it's kind of a KYC, which is done on behalf of on the issuer side to complete aware of authentication of the card holder from the request which we received from the wallet. This is the role of the token role. The token generations which conducted by the TSV, TSP and token wallet, and the generated the token and original it is stored and secure from the TSP, one of the component, and ID and VA, it's a KYC methodologies which we have to derive the risk scores, and also the token can be validated between the issuer and card holder. And token domain restrictions, we can restrict the domain, the token for the restricted for the particular domain. If you issuer don't want to use that particular the domain perspective, which means the merchant side, so we can restrict it through the using this token domain restrictions. And token lifecycle management, it is for stolen cards and delete and create and or updates. These are the benefits which we are using it for the token lifecycle management. Now the in-app transactions, it's kind of a little bit little more innovative way of when we are doing the e-commerce transactions. Mostly the cards numbers and cards data will entering into the merchant side to complete the transaction. When in the in-app transactions, we can use this card token values or the token data, and we can complete the transactions, e-commerce transactions. So there is no requirement to enter the CVV or full card data like expiry date. It is like a token validations. The e-commerce transactions are initiated through the token data instead of the real the PAN number. So this is between the merchant and the wallet. Wallet device having the mutual the business agreement, then they can initiate the transaction without the card data. This is the in-app transactions. And this is there is a main the core of the cards part. One is the provision part, another one called the transactions, how we can do the transactions. When cardholder initiated the request to the token service provider, the token service provider will take that token and will send it to that issuer processing systems, which the issuer processing system will do the validation of ID and identifications and verification methodologies through like it's kind of KYC. Once it is done, the PAN will be forwarded to the issuer bank. Then issuer bank will be approves this the tokenized PAN, and the same way it's responded to the issuer processing, which means it's like a TSP only. Then the issuer processing can complete the tokenization part and send the request to token service provider, and token service provider will send it to the wallet. When this could happen through the OTP or SMS, which the authentication of the card holder and device system, all which may be which will authenticator will be validated, and the whole process could be completed of the provision part. So next, this is the most way of the wallet, and TR it's called it token request TSP, and the TSP it's called ITSP, which is issuer token service provider and issuer. These are the main component the involved to create the tokens part. This is the transaction part. Once the customer is initiating the transactions from the in the wallet, the transactions the transactions will send it to the card schemes or the middleware system. Then the card payment system will route to the issuer. Issuer will be always connected with the TSP to converted this token to detokenized, and then if the detokenization is completed, then the transactions once validated with normal validation of the CRM system, it's a card management system or their core system. Once it is all the criteria which it is completed, then it will move to the approval authorization will happen. Then the transaction authorization could forwarded to the payment network and the merchant hub, and the transaction could completed from whole side. So this part between the transaction part, the token and the detokenization is happen in the TSP part once the transaction has been initiated from the customer side. This is the token main the token explained the token enhance the security part, enhance the features and reduce the breach, data breach. And in the real world example, we are using the digital cards, and e-commerce transaction is called a card on file transaction, which is the, instead of using the same card data, they can save that data and send it to the issuer in the future transaction or subsequent transactions. And the wearable devices, it's like the watches and other wearable devices, also a real example of using the tokenized transactions. The main conclusions of this part, it's like the security and efficient, innovate way of to exchanging the transactions. It's a main, the reduce the compliance part and more convenient and innovative part of to complete the transactions. But all the entities, it's banks and then financial entities and the customers and everyone. So it's more secure way of using, especially for the contactless transactions. Thank you so much for all your time to watch the presentations. Please, if you have any questions, please suggest.
Okay. Thank you, Priyas. So in terms of tokenization, so I have maybe a couple of questions. So one is, how do you see, I mean, tokenization being relevant in the current context, where more and more shift is happening for card not present kind of transactions, and tokenization has traditionally been very closely associated with card present transactions. So do you see tokenization still being relevant as we move to more card not present? And the previous presentation we spoke about more shift towards wallets and other payment methods beyond physical cards. So will tokenization still be very relevant?
Yes, obviously, it's because we are using the digital, the tokenization, the transactions part. When it is main record for the contactless transactions, we need this EMV tokenization part, which example, the e-commerce, even it is a card not present, we have the feasibility to do the transactions using the tokenized transactions only. It's like in-app transactions. There is a no need to entering the card numbers, and we can use that the tokenized the values or token the part which it is using in the e-commerce transaction also. And also one of the advantage we have that COF, card on file, whenever the customer, when I'm the entities which I'm customers, I'm using my first time in my transactions part, when I'm entering my card detail, all the card details, all the PAN numbers which it is having, the token payment token values stored in the merchant side. When next time when I'm doing the transaction, it is called agreement ID. We are communicating to the issuer instead of I'm sharing my card, all the data to them. So the e-commerce perspective, and also we can use this the token values in the digital payment system as well as the e-commerce transaction. So it's very relevant to using it, and more the way of nowadays, it's more, the volume could be more than comparatively to physical cards. There is no requirement to use the physical cards. It's like enhancing the more experience with the customers for using such a kind of the transaction. So there is no the volume could not be reduced. So it's a more innovative way of using the token, and also it is ready. It could be used anywhere. The same token can be used on the e-commerce also. The same token methodology, we can use it for the wallet and the watches and wearable devices anywhere instead of using the physical card. So recently we come up the ratio of increasing the payment using the card and the wallet tokens. It's more increased gradually. It's increased comparatively to now the card industries. So it's more relevant for both the sides.
Okay, so do you see any adoption challenges? Key issues related to adoption of tokenization across the value chain in the card, because it's not just one player there, multiple players, and especially with the with more transactions going across networks. Do you see any adoption challenge?
Yes, we have that, but always we have the mitigated to have the adoption challenges. Example, the Google Pay or Apple Pay, they have that wallets which we are having in the cloud system. So they are having the keys with the 10 minimum number of keys. instead of using the wallet in the multiple consecution transactions. It's called limited key methodologies. When I'm the user, I'm using the offline transactions, the 10 transactions. After 10 transactions, I couldn't use that same wallet connecting to the internet to get the keys. So during the keys exchanging between that respective the wallets and the cards part, so it is a validation is happening, and also the keys will be exchanged between that both the parties. So the keys will be very strong to mitigate such a kind of the frauds other part. So the keys are very major, and we can every technology is having that limitations, but we are trying to mitigate all the stuffs with using this keys part. So more control over using the keys part also.
Okay. Probably I'll come back. Chandra, over to you. Thought I'll have one more question, but I'll come back on that question.
Okay, sure. Rios, just wanted to understand, consider there are multiple channels. Okay, there's one is I still have my physical card. And then I have tokenized my card using, let us say, Google Pay or whatever, Samsung Pay or Apple Pay. I blocked my card using mobile application. Okay, how will the transaction, how do you see when I'm making the transaction with respect to my tokenized card? How do you see the transaction being safe?
So if you mean that your cards is blocked by the user, how it could be reflected in the transaction
by the bank's mobile application, I blocked my card.
Okay, the mobile application, obviously it will be connected with to the end of the issuer part. Once it is that the card you requested for the blocked my card, obviously it will hit that issuer system. Issuer system is already connected with the TSP, because there is the whole the hub which will be connected with all the entities. It's the request anywhere, it will be IVR, or you can do it in the SMS, or you can use the call center and block it. Obviously this TSP will connect it to the multiple entities to the core banking system. Once you receive that request from that customer, it's like the suspend or block.
Sorry,
Yes,
sorry, just 1 second. TSP is connected. How does TSP get connected to multiple banks in the world?
No, it's not multiple banks. The TSP have their own entities, which is each bank holding their own entities, because the TSP is that third party one. I'm holding it's a bank perspective. I can use that, because I can't use the TSP for one TSP for all the global banks. So each bank having their own TSP, which will be generated the token and the de-tokenization. This is the one part. Or sometimes the central bank do that TSP. It's in my countries, it's a central bank is holding the TSP. It's like RBI part, they are holding that TSP, which on behalf of all the banks, they are the one communicating the tokens generation and de-tokenization. It happened through the bank, because bank doesn't know that the TSP part, because the central bank holding it. So on behalf of banks, some countries will, the own bank will having this based on case to case the part. So their own TSP, when we requested to them, obviously the system is connected to the TSP. TSP will have the life cycle LCM, we call as the life cycle management system, which will have that tokens having the multiple status and multiple stages, have like a new token, it's a suspended token, we lost token, or it is a replaceable the PAN token instead of without changing the token in the front end part. We can do the PAN replacement also. These are the between the TSP and the issuer bank. There is a called interface called ITSP. It's an interface which it's a global a GAU interface. We can the banks getting into that interface, and then they will use this particular token or PAN, which they can be use the suspended from the backend system. Once it is suspended, obviously it will hit it in the front end in the backend. It's a TSP. It's like the hub between issuer as well as the wallet. Whenever I'm doing some changes in the backend and front end, even customer immediately through the device, they do the suspended from this his side. Obviously, it could through the TSP, it will update it into the issuer system. So it is an interface system. So even though it is from net banking, he raised the request. Obviously, it will be communicated internally, and the backend system will be generated the request, the token requested, and block the card, and the same card push it in the front end also transaction in the front end and the status to the customer. Even customer is not, example, the customer is an offline part. He never in the online part, because this all the flow will happen in the online part. If suppose the customer is not connected that time in the internet, when he trying the transaction, it's a backend will be obviously know that this card is suspended. The transaction could not pass it process to that authorization.
Yeah, that is at the last fag end. Anyhow, that will be taken care. But in between, how the transaction will happen and what is the security. That's what I want to understand. The next one, what I want to understand is about what is the difference between a tokenization of a debit card versus a credit card? Do you see any differences?
No, normally there are two types of debit cards. It's a local entity. It's like we have the two tokenized normally in the debit card, and one token for the credit cards. If I'm using that, I'm one of the country, I'm using that local card, the local card scheme. I'm trying to provision this card. I will do that local scheme, the token, and also Visa and token also. So when I'm trying the transaction inside of that country, it will be go with that local token transactions, local scheme token transactions. When the same wallet, when I'm using it abroad, then the token will be processed as a Visa or Master. So whenever I'm doing it for the transactions perspective, debit card will generate the two tokens, one for the local entities in the local domestic purpose, another one will used for the international card scheme. When it comes the credit card, locally issued to the country credit card, this is one token which will be uniquely used from the both the side, but the transaction authorization happen between only the respective card scheme, international card scheme, Visa or Master or like that. So it's a two token carry for the debit card and one for the credit card when it comes to for the tokenization part.
Okay. Yeah. Thanks. Over to you. Sri wanted to ask a follow-up question.
Yeah, so actually, you kind of touched upon the TSP part. That's what I was coming to. So I think we are good. Yeah. Thank you.
Anything?
Thank you so much, Rios.
Thank you so much. Thank you. Thank you, everyone, giving such opportunity to interact with such a excellent the panel team and your esteemed organization. Thank you so much.
Thanks once again.
Thank you.
So then we'll move back to one participant from the green belt, Josna.
Yeah, hi.
Josna, can you start sharing your screen and
Yeah,
also turn on your camera?
Yeah. I hope you can see my screen now.
The screen is not yet visible, probably. Yes, now we can. So you can start, Josna.
Thank you. Hi, everyone. Good morning. Myself, Joshna. I'm from India, currently residing in Bahrain. I'm operations team manager to a PSP. I have overall 13 years of experience in fintech and approximately 3 years experience in card. So today I selected the topic for the presentation as different revenue models in the card industry and how the card issuers, networks, acquirers, merchants are making money or generating income through these multiple revenue models. Okay, first, we'll have an overview on who are the key players of this card industry, which are actually card networks, which is MasterCard and Visa, and the card networks, then card issuers, which will be like banks, financial institutions, which are actually issuing card on co-brand cards, then merchants, which is retailers and acquirer banks, and payment processors. So in this scenario, wherein the card issuers and payment processors will be one institution where a card issuer have the capability of processing the transaction. I mean, the technical capability to process the transaction, it will be one institution. So it will come under one category. The card issuer and the payment processor will be one institution. So we have 5 primary revenue models, which is actually interchange fees, annual membership fees, merchant discount rates, which is MDR, and interest income. And the 5th one is transaction and services fee. So these are the major 5 pillars wherein how they are generating the incomes using in the card industry. So the first one, before we go into in detail about how it works in the card industry, we'll see the institution roles in the card revenue. So we have 2 institutions, which is like financial institutions and non-financial institutions. So under the finance institution, it will be like bank, credit unions, non-banking financial companies, etc. And in non-financial institution, we'll have the card networks, which will be processing the transaction, the processor, then the fintechs, etc. So we'll move to the major one, which is the interchange. So how the interchange works, what is actually the interchange fee is like when we are using our card to do a merchant, when we are using this card to do a payment, the merchant pay a certain percentage of fee to the card issuer. This is actually to compensate the fraud risk processing cost of the or the rewarding programs. So this is actually going completely to the issuer. So typically in the MENA region, it is like 3% maximum charge about that from the transaction value. This is actually set by the schemes, but institutions who are actually also playing a role in setting up this. And it also varies from card type to merchant category as well. And you can see on the right end, the reward cards actually having the highest interchange rates, and the lowest interchange is actually for the debit cards. The second one is annual and membership fees. And this is something which we can call stable ones. For example, bank is actually charging a card holder of like 100 rupees in order to maintain annually. He should pay that particular amount to the issuer bank. So this is something stable or predictable income wherein the issuer is actually getting on a yearly basis as a membership pay or the annual. And this is actually a different naming convention. It will be like maintenance fee or card maintenance fee, etc. But this is something predictable. And as a reward, they will be getting travel perks, launch access. It's also depends on which card actually they are selecting, etc. And the third one is like the merchant discount rates, which is MDR. This is actually something the merchant is actually paying to the ecosystem for when the card is accepting in the platform. So this is actually getting split between the acquirer bank, the card network, and the issuing bank. So this is also in the as like it's almost like 3.5% maximum. So it will be decided by the card network. And the highest MDR will go for luxury goods and online, and the low will be for the necessity things like supermarkets, etc. Then the fourth one is interest income, which is actually a card holder don't pay the full balance. We can take an example of credit card. So if I have a due of 1000 PHD and I'm paying only 100 and 900 I have as a due. So for that 900, they'll be taking a certain amount of interest in order to make sure that like this is actually mandatory. It will be agreed by the card holder whenever the card is issued. So this is actually a high interest, high range of generating the income. Then the fifth one is transaction and service fees, wherein it's very familiar, wherein we are charging for foreign transactions, cash in advance, bank transfer, overdraft, etc. So for example, For cross-border transactions, the issuer can set a fee of how much percentage should be charged, etc. Then this is something, the comparison on how the typical distribution is happening in the ecosystem. This data I have taken from 2024 annual report of Visa and MasterCard and other things. So we can see the most of the revenue is actually generated from interest, and the second is actually interface, and the third one goes to the annual fees, and the fourth one is transaction fees. And this is something how the revenue flow in the card transaction work, wherein we have card holder and merchant and acquiring bank and card network and the issuing bank. For example, a customer is using a card to do a transaction of $100. The merchant will be receiving 97 or whatever the agreed like a percentage which he decided. So, and the remaining will be split between the acquirer bank, card network, and the issuing bank. So it is from use to use case, vary from business case to business case, how much percentage is the merchant is paying, etc. So emerging trends in digital revenue models are like digital wallets and application, buy now, pay now later, crypto and blockchain. So this is something actually emerging trends in the digital revenue models. So wherein if we come and ask, if we explain about the digital wallet application, they are paying transaction fees on P2P payments, peer-to-peer payments, then premium subscription models. And when it comes to buy now, pay later model, the merchant is actually paying a commission of 2.2 to 8%. And it is also actually taking a late fee from the consumers. And there'll be a certain amount of interest also for this. Then crypto also, which is actually emerging, which is actually giving conversion fees, rewards in cryptocurrencies, lower interchange alternatives, etc. So I have some examples actually, which in terms of high value spending cards and closed loop cards, then credit cards and transaction processes. So here we can see that for Chase Sapphire Reserve, which is actually issued by Visa, is having around annual fee of $550. And the interchange is actually very high, which is 2.5%. So in the MENA region and all, it is like 2% maximum. Globally, it is like it is 2.5% in terms of interchange. But as a reward, actually, they are telling they are giving back the premium rewards like launch accesses, and this is actually for targeting the high spenders. And the second one is American Express, which is a closed loop network. And the revenue is high on MDR, actually, merchant rate, actually. And this is actually having less acceptance. So it's actually generating revenue from MDR. Then the Discover card, which is there is no annual income, annual fee model or anything, but it is actually mostly generating the income through interest and interchange revenue model. And the Visa network, which is the transaction processor, which is actually generating revenue through the network fees in order to process the transaction and giving all the technical related support, etc. So the card industry is not actually staying on or looking only into a certain revenue model. It is actually trying to diversify and get more input out of it. So we have card industry uses multiple complementary revenue streams wherein attract the customer, saying even the card holder is actually ready to pay certain amounts if he is getting something is in return. Then the interest income, it is actually the major one, which is actually generating income through the interest, wherein the customers are in need actually will not worry about the interest rate which they are paying, and 70 to 85% of the income is generated from that. Then the third one is the revenue model. The revenue models vary from card type and card product which we are selecting, which is from premium, it will be different, standard, it will be different. Then, as I mentioned, the digital transformation is creating new revenue opportunities. That is actually I have to present today. If there are any questions?
Thank you, Jyotsna. So you mentioned different revenue models. Now, in the card ecosystem, which has different players, how do you see these revenue models align? There was so you've given different examples, right? So and types of revenue models. So for an issuer, for an acquirer, and for the network provider, and so on. So they're each probably have different aspects on which they depend or they kind of align to. So what revenue model really works, and what do you see are margin pressures or revenue pressures these days for those players? If you can just explain that a bit.
Yeah, sure. It is actually vary from business case to the use case which we are having. For example, if you are an issuer and a processor, and you are using we can take an example of MasterCard, wherein you are a principal member of a MasterCard, and you have a different vertical of business. One is actually a physical card, and the other one is a virtual card. And in the virtual card, you might be supporting travel-related payments. And in the other vertical, you will be providing card as a service, software as a service, etc. So the issuer will get an opportunity to decide on what he can actually apply and how he can generate the income in terms of selecting the right products from the schemes. So, for example, for MasterCard, we have different types of products from MWP, which can be utilized to for the travel industries, which is actually give a good interchange. And there are actually companies which actually attract the merchants by telling, okay, I'll pay you this much of interchange. You do come and do the transaction on my platform, and I will split that interchange, whatever I'm getting from this particular product. So they can, they should actually plan on what is actually their use case and how they can make that work in the region which they are actually supporting.
Okay. Sorry, I seem to have a tech glitch. My screen has frozen. Just give me a minute, please, Chandra, if you can take over. I'll sort this out.
Sure. Yeah. Jyotsna, you come from the operations, so certainly you know the revenues and expenditure. Okay. With all these particular things, if you go to the pie chart slide.
Okay.
You're looking at the revenue mix where the interest rate and other things, but let us take what is the cost of this particular thing when it comes to collections? Are you saying that, the interest income, which is around 40 to 50%, are we really getting the benefit for the cards industry, or what's your thoughts?
It is actually they're actually that's a reason actually. If I may tell from the region, the MENA region, the banks are aggressively selling the credit cards, wherein even the salary range is very low. The bank is actually ready to provide cards to the end user. But at the same time, they are pushing this particular interest rates in different parts and making sure actually most of like if I'll say actually 85% they'll try to find a way to take that money back. But as you're saying, like if it's actually a prepaid model or a credit card model, we will end up in some negative balances, etc. In that scenario, we have to make sure that we have to find a way to actually recover that money from the end user, or we have to take the money from the issuer. Actually, if not from the end user, you are getting the money from the issuer. So it is actually very from like different use cases. For example, if we'll say a card holder, actually a co-branded card issued to an expense management, and they provided that card to the user, and the user utilized it, and he actually utilized it for his personal uses. And maybe that actually the money actually already gone from the net settlement, like it's already settled to the scheme. The scheme is not actually worried about any of this. So, but the suffering, it's actually the issuer part. So the issuer should have a proper contract or the agreement with the and like the service provider or the program manager, how this actually will work. Or they can at least keep a security deposit or a collateral or a float amount, make sure that they're not exceeding that particular limit, or we have enough balance to recover. Even if they exceed, we have enough balance to recover that.
Okay. What is the hidden revenue which is there in the cards model? This is all very transparent, but there is a hidden revenue which is there in the cards model. So can you, if you know anything, you can touch upon that.
Hidden revenue, like it's purely like we can set some margins in using this card scheme programs, wherein as an issuer, we can set up in MasterCard or Visa platform, wherein for authorization, a certain amount of it's kind of an interchange where a certain percentage from the transaction amount we'll be taking as a processing fee, or it is purely based on which vertical you are applying to.
That is a business side. That's a business side. But I want to understand if you have any idea on the hidden side of the revenues.
Hidden side, I don't have much.
Yeah, that's okay.
Explain.
Yeah, that's okay. So you are talking about the business model, which you go with a kind of a step based.
Yes, actually, that we don't have to actually make it visible to the end user, wherein actually we can actually put it on the card level, and that will be actually probably, but it purely based on the regulator. It should be purely based on the regulatory perspective, and also within the product or the program which we selected from the scheme. For example, in this region wherein I'm in Bahrain now, so we have we are not supposed to charge our cardholders any ATM fee, because it's from the regulatory, from the CBB. So they mentioned that for widowers or disabled, like widowers actually not supposed to charge any, if they are doing any ATM withdrawal, they are not supposed to get any charges while doing ATM withdrawal. So we don't have any mechanism to understand that, so that in case the entire region will not take any charges on the ATM withdrawals. So that will be accepted by the issuer, and it will pass through, or it will based on the business model.
Okay. Yeah, good. Thanks. Do you want to take the next question if you are online back? Maybe he has some trouble with respect to getting connected back.
Right. I think let's just take a pause for maybe 10 seconds or so. Let's wait.
Do you, okay, Yeah, I think he has come back. Yeah,
Yeah, sorry.
go ahead.
I don't know, some issue. So sorry about that. Um, uh, just so maybe I missed a few seconds of this, so just apologies. The question that I had was on um, uh, uh, when it comes to revenue and fees. Um, uh, is there, what is there is something related to chargebacks and dispute handling, right? So, is there something that you see that impacting the way it's how is fees support, or the fee model managing that, and how is it impacting revenues?
It's actually, yeah, of course, the disputes will come, as in, like, if anything is actually, of course, the transaction related disputes will come. So that is also how we'll handle, I mean, how we'll actually design the project. For banks, actually, they have a different set of scenario to handle the dispute. And for the financial institution or a PSP who's actually issuing co-branded cards will take this particular for example, we have a $13 fee for card issuance. So this will be actually taken, it will be 100 pass through to the end user or the merchant. They should pay actually. If they will win the case, they will actually they don't have to pay. If they don't win, then they have to pay that, or else it will be absorbed by the issuer. So it is not actually generate, it doesn't actually generate any revenue, but it is actually again depends on the use case, how you're handling the revenue, that revenue stream, or the project, or the like, if you want to accept it, the issuer can accept it, or you can pass it to the merchant. And
Yeah. So of course, so the question really is about with the number of transactions that depends on the network and transaction getting initiated. So dispute trends are increasing, and it is impacting revenue models sometimes. So is getting is there a significant correlation between the disputes that are being raised and that is leading to revenue leakage or fee impact? And where, in my question is also which part of that ecosystem is taking that hit, because it'll be eventually one of the players that will get impacted. So if that something that you can explain a bit.
Yeah, sure. Actually, there will be an impact in terms of the dispute if the failures is actually on the high end level than the process transaction. So of course there will be an impact. So the hit will be taken by like who is actually winning the case. Like if it's an issuer, then the money will be credited back to the issuer account. And if it's an acquire winning, if they don't have, if once the case is actually filed and scheme is actually finding no relevant proofs to justify that particular chargeback or the dispute, then it will go to the acquirer side. So the revenue we can see that the major schemes actually don't have that much of failures. If the failures is then the institution should take care of that, because then they have to see what is actually happening in terms of the rejections or the highest amount of failures has happening acceptance level. Then they have to talk to the schemes. So they have to find or mitigate that particular part first, then they have to look into that.
No more questions from me. Thanks.
Thank you so much, Jyotsna, for your presentation.
Thank you.
Right. So we will move on to our last presenter for today. He's from Black Belt, Manish.
Yeah, hi, Amay. Start sharing my screen. Okay. So hello everyone and good morning. So I am Manish Mohan Bhabid and I have been working in cards and payment space for more than 6 years now. And today I'll be presenting on EMV tokenization. So before we look at the definition of what is the EMV tokenization from customer's point of view or cardholder's point of view, let's understand why it is important. So you may be standing at a queue at a merchant or a grocery store and you take out your debit, prepaid or a credit card. So there is a possibility of your card number, your name, your expiry date or your CVV2 getting compromised. Or let's say the merchant is fraudulent and there is a skimming device installed at the POS machine or the ATM where you are trying to use your card. And maybe on an e-commerce merchant, you are entering your card and the merchant is fraudulent. So there are a lot of ways in which your card number is vulnerable to get exposed to the fraudulent entities. So the industry came up with the solution of tokenization where your real card number and expiry date is being replaced with a token or surrogate value. So the tokenization made sure that basically without disrupting the existing infrastructure in the cards and payments, so and the ISO 8583 message with the minimal changes, this can be implemented. So basically tokenization is the process of replacing your sensitive card data and expiry date with a surrogate value or a token value which does not have any extrinsic or exploitable meaning or a value. So as here we can see the PAN and PAN is getting replaced with a token number and the expiry date will also get replaced with a token expiry date. So this token has no value outside its intended use. So if the token is issued for your Apple's or iPhone's secure element, it will not work outside its domain, even though the token value is compromised. So let's understand what are the parties involved in the tokenization. So these two are the new players which were introduced in the tokenization. First one is the token requester. So this can be your Apple Wallet, your Google Pay, or your Samsung Wallet, or your mobile banking application who is requesting for the tokenization. And it is registered with the TSP, which is Token Service Provider. And token service provider are the payment schemes like Visa, MasterCard, Amex, which are managing and defining the framework and rules and APIs for their token program. And they basically generate and manage the tokens in a secure token vault. So MasterCard runs their TSP, that is MasterCard Digital Enablement Service, and Visa runs VTS, that is Visa Token Service. Then there are existing players, issuers, acquiring banks, and their processors. Then token is also called as DAN or DPAN, which is digital PAN or device PAN. So this is basically, we can call it as a token. And FPAN is the funding PAN, which is the original physical card number. So basically here we are replacing this funding PAN with the token or DPAN. And there is one more concept, that is a PAR, that is payment account reference. So this is the common ID which links multiple tokens to one card account. So we'll see this in our upcoming slides. So here briefly we will see the token issuance steps. So first is token assurance. So before issuing any token, the TSP will request the issuer to identify and verify their cardholder to make sure that the cardholder who is requesting for the tokenization is the rightful owner of that payment card. Then there is a token generation where the TSPs like MDES and VTS will generate a token vault and map it with the real PAN in their token vaults with token related data. Then there is token issuance where the TSPs will generate the token with associated details with the keys and they will prepare it for the delivery to the token location. And token provisioning is basically sending the token or delivering the token to the token location. The token location can be your iPhone's secure element or it can be on the cloud. So here I have made an effort to simplify how the token is issued. So here we can see the entities. Token requester is there, which can be your Apple Pay, Samsung Pay wallet, along with the TSP SDK, which is provided by the TSP, where this TSP SDK is integrated within the mobile wallet, and there can be the Apple Pays and Samsung Pays or Google Pays backend servers as well. So this token requester along with TSP and issuer, let's see the flow. So when the customer enters his card, when he wants to tokenize his card or uses Apple Pay or Samsung Pay or Google Pay, he will manually enter his card number, expiry date or CVV2, or maybe he can scan his card and his details will be auto-populated. And once he clicks on tokenization, he will see that your request is being processed. And then first request goes is the eligibility check. And this eligibility check, this TSP will do some validation, like whether this issuer has already been certified for the tokenization or not, and whether this bin or card product is allowed for the tokenization or not. And then the TSP will forward this request to the issuer as well. And issuer will do some checks whether the card is active, it will make sure it is not blocked, and whether this bin or card is allowed for the tokenization. And based on these validations, it will send a response. Let's say in our case, it is an approved response. And then the TSP, the TR or token requester will send a get asset call to the TSP. And because this issuer has already done the certification with the TSP, so it had already shared in the pre-certification stage its card artwork, its terms and conditions, and issuer name. So in the response to the get asset, the TSP will respond with the terms and conditions, card artwork. So once this card is tokenized, it will show how the card will look and the issuer name. So once this is done, in the next step, here you can see the cardholder is seeing the terms and conditions. Once he accepts these terms and conditions, the token provisioning will start. And now the ID and V, that is token assurance, will be done. So here you can see, just a moment. Yeah. So here you can see now the issuer is doing all the detailed checks like card number, expiry date, CVV2. It will do the risk assessment as well, whether this cardholder has done already any provisioning in other mobile app. It will do the velocity checks, whether this cardholder is sending multiple provisioning requests in a short period of time. So based on all the information that is available with this issuing bank, they will do the analysis and they can respond within one of these three paths. So red, orange, and green. So let's say this issuer bank says that, okay, we trust this cardholder. They will directly approve this provisioning request and the TSP will generate the token and encrypted keys and deliver it to the token location. Let's say the cardholder has entered incorrect CVV2, then the issuer bank will decline this request, and most of the cases, the issuer bank takes the orange path, which is the challenge or step-up authentication. So once they send this response, the TSP will ask issuer, or maybe they already know what is their authentication method. So mostly it's an OTP, where here you can see the OTP goes, the response to the get authentication method that issuer supports OTP validation. And based on this, at the same time, the TSP is already generating the token. Here you can see the TSP has already generated a token and sent an encrypted token and the keys even before the cardholder has entered the OTP. So once this token goes to the wallet, the TSP SDK will decrypt this token and put it securely in the secure element, or in case of host card emulation, it will go to the cloud. Now next step, or at the same time, this generate OTP request will go to the TSP. TSP will send the OTP request to the issuer. The issuer will generate an OTP and send it to the cardholder. The cardholder then enters the OTP and validate the OTP request goes to the TSP. TSP validates the OTP and it will notify the user that your token is your OTP is validated and the token is activated, and same response goes to the issuer wallet. And then at the end, the user can see their tokenized card with the issuer bank name, their logo of the TSP, and then token number. So here I'll briefly explain the same process for the secure element. So here you can see the Apple iPhone with a secure element. It will request for the token, ID and V is being done, and the TSP will generate a token in their TSP token vault and create a mapping between the PAN and the token number. And token is securely loaded in the secure element of the device, and then the token will be activated by the once the IDNV is successful. Similarly, for host card emulation, the only difference is that the token is stored on the cloud and it will be replenished once the LUKs are about to be exhausted. Now, this is the token usage process where the card holder, which has already tokenized this card, is trying to use this card on a POS machine. So basically, instead of the real card number in data element 2, PAN will be passed, and instead of real expiry date, your token expiry date will be passed in the authorization request to the acquirer. Acquirer will forward the same token to the TSP. TSP, because they already have the mapping between the token and the PAN, they can de-tokenize this and send it to the issuer. And then issuer will respond, and the TSP will again re-tokenize and send the approval or decline response to the POS machine through this flow. So basically, the token is never, real card number has never traveled till the TSP. So then there is token lifecycle where you can activate the token. So token, once it is token provisioning is completed after the IDNV, token gets activated. There is a provision to suspend token as well. So if it is a suspected fraud or device is lost, you can suspend the token temporarily or unlink the token as well if the device is lost or cardholder reports the fraud. Then the token or the PAN attributes can also be updated. So TSP can update the token data to extend the validity. Okay, extend the validity of the token. Also, if the PAN number is reissued, that can also be updated. So these are the token lifecycle management. So that ensures that the real PAN and the token are aligned and secure in the TSP environment. And the major change here is the payment account reference. So basically, issuers, acquirers, and merchants, they used to heavily rely on real card number before the tokenization. So they used to rely on PAN for fraud and risk checks, loyalty programs, analytics. So after the tokenization got introduced, this real card number got hidden from the merchants and acquirers. So there had to be some way where the merchant and acquirer and issuers can still do their fraud or transaction analytics. So this PAR or payment account reference was introduced, which is a common link between all the tokens. So let's take for an example, a customer has a cardholder has a token on his Apple Watch. He has a token on a payment ring or a payment sticker or in his iPhone wallet. So that all these tokens are linked to this PAR, that is payment account reference, and this PAR is uniquely linked to the PAN. So this PAR has one-to-many relationship with the token, but one-to-one relation with the PAN. So here PAN cannot initiate or route transactions, and PAR cannot be used to reverse engineer to reveal the real card number. And what are the changes in the ISO 8583 messages are? So these are the existing data elements, where in data element 2, the real card number was being sent, and it has been replaced by now token in the token transaction. And then D40 expiry date is also replaced with the token expiry date. And there we can see there are EMV tags which are being added, like tag 9F24, which is for payment account reference, tag 9F24 for 25 for last 4 digits of PAN, and 9F19 for the token requester ID. So there can be also token request indicator or TRID, that is token requester ID, which is assigned by the TSP, and also the digital wallet ID as well. And coming to the conclusion, so EMV tokenization now has been the foundation of modern day digital payments. So EMV tokenization really ensures that the real card number or the sensitive data of the cardholder never leaves the issuer's secure environment. And the PAR is also used to securely identify and link to the PAN, so the analysis can also be done. So basically, EMV tokenization does not only protect the cardholders, but it also ensures that the trust is built by the trust is built to the cardholders to use more digital payments, and also it's a future-ready model for issuers, acquirers, and fintechs. Thank you so much.
All right, thank you, Manish. So I have a couple of probably, based on the context that you already said. So, how is tokenization different for prepaid cards versus the typical debit credit cards? Is there a different way of handling?
Okay, so tokenization basically is the same. The flow is exactly the same for definitely all the products. So it's just the replacing of the real card number and expiry date with the token number. So the flow is exactly the same. I don't think there is any difference. But how the issuer is managing, for example, let's say for debit or credit, a debit card, issuer might not allow the offline transaction, but the credit card, because the risk is with the bank and the credit risk can be managed, they can allow the offline transaction. So there can be a difference in the transaction processing, but what I feel in the token issuance process and how the token is used, I don't think there is any difference in that flow.
So when you talk about offline transaction, can you elaborate a little bit more how that is different for prepaid cards and credit cards? I mean, why would it not be allowed?
Okay, so because in the credit card, the credit risk the credit can be managed, because once the customer pays, basically the customer gets a billing and then he is going to pay. So there is a possibility.
Prepaid card already has a value associated with it, right? So
yes, it is possible if the balance is maintained in the EMP chip itself, it is possible that it is allowed, but mostly
that's
the
the
balance is
purpose
not
for
mentioned.
prepaid cards, right? So they should have a value associated. In fact, there is no customer data associated with it. The debit or credit card has a actual customer. These are prepaid cards. Pretty much anybody can use anywhere, right? And it has a preloaded value.
Yes.
So why would it be not available for offline?
No, prepaid, if you say in context of the gift cards or loyalty cards, yes, it is possible that it is allowed offline. Even the transit cards that we used in UAE, like a NOL card, that is of course an offline card, which is prepaid card. So it is offline. So the limit gets, the balance get updated, once you use it. So it is possible to have in the context of these transit cards or loyalty or gift cards. Yes.
So again, my question was, what is the relevance of tokenization in prepaid cards? I mean, is it even relevant?
Not in terms of the loyalty or gift cards, because those are already
Any prepaid card for that matter. I mean, why only stick to loyalty or gift cards? I mean,
Yeah.
it's a value loaded. Anybody can withdraw. In fact, there are, we can in fact add purpose to the prepaid card also. What purpose can be used, but it doesn't have to be specified to people. So it can be pre-stored value or value stored cards. Does it have any relevance to tokenization?
Yes, it does have a relevance, because still there are some financial institutions which still issue the card and they use it as a debit for the customer. So basically, the customer, whenever he wants to do the transaction, he will just top up his card and then use it. They don't want to keep any amount there. So he wants to use his card for, let's say, $100 for an e-commerce payment. He will just do a top up at that time and he will do the transaction. After that, he might not load the money. So there are still financial institutions and customer base who are still using this prepaid card like that. So yeah, it's important to protect the information in that context. Yes.
Fair enough. So the other question I had is in relation to tokenization. So the chip-based cards between the two, I mean, payment failures and loss of transaction related topics. How is tokenization helping in dealing with that versus the traditional chip-based cards? Is there
Okay.
any difference, or
Mhm.
it's pretty much the same?
So the difference I can say is that the issuer master key basically, which is managed in the chip card by the issuer, is now managed by the TSP in the tokenization. So yeah, they can generate the limited usage key that is used for the tokenization, and they do the validations on behalf of the issuer, for that matter, for the chip validation. And yes, there can be a possibility where the issuer system might not be able to decrypt the chip related data properly, and maybe if they don't respond properly to with the ARPC in the chip data, there is possibility of the transaction failures. But I think with the TSP in between, which is doing all the validations, I think it's much more similar to what is a chip transaction. Yeah.
So what's your conclusion? Sorry, wasn't clear. So is tokenization, token-based process is better, is reducing the failures, or was it chip-based which was doing it better?
Yeah. So with the token based, I feel there are added failure points with the token requester. Then there is a TSP. But process-wise, I think tokenization is providing much more security. But I think chip-based transactions are still relevant because there is added complexity with the SDK, with the token requester, replenishing the limited usage key. There can be a mismatch in the TSP that the real PAN and token is not matched properly. So there are points of failures which are increased in the tokenization. But it's important as well to protect the consumer data. But I feel chip-based transactions are still relevant, and more solid in that transaction flow.
Thanks, Chandra. Over to you.
Thank you. Manish,
Yes.
I want to understand one particular thing with respect to the flow, what you are. Can you go back to few of the slides?
Is this the one?
No, quickly.
This one?
Yeah, okay. Now, why should this entire thing, what we are trying to do is mainly to protect the physical card,
Right.
correct?
Yes.
Most of the banks are going with virtual card.
Mm-hmm.
So what is the necessity of a tokenization which can automatically happen with respect to whenever I want to add, let us take, I want to add a new, requester, okay?
Okay.
Then automatically it can be added. I don't need so much of information to flow and other things. That is first thing. The second thing is that who is actually paying for this entire infrastructure?
Okay.
So
Yeah. So first of all, the virtual card that is issued by the issuer might not be interoperable. So with all the merchants. So basically, it has also the domain controls, right? So in TSP, basically with the TSP, because these are global TSPs, the issuer can do the tokenization, and those digital cards can be used all over the world at any merchant location. And sorry, what was another question? Another point?
who is paying for this entire infrastructure?
Okay.
Because see, you have an interchange fees and other things which we had just a recent presentation. But in this particular thing, there is so much of infrastructure. There are TSPs, there are Google Pays. Everybody is there in that, in Google Pay or whoever it is. Okay, but so many things are there with respect to the entire flow.
Yes.
How are they getting funded? Who is paying for the infra?
So basically, TSP are encouraging the issuers and acquirers to do this tokenization, because definitely it's going to reduce much more fraud. So TSPs can incentivize the issuers and acquirers to adopt tokenization, and also definitely issuers and acquirers also have to invest in their infrastructure to make sure that they participate in tokenization, and basically their frauds are reduced. Fraud volumes are reduced. So basically, TSP can also incentivize them by paying some amount to participate in the tokenization. So usually what issuer and acquirer need to do it. But I feel there is a minimal changes when it comes to tokenization, because in the token requester side and TSP side only, much of the things are being done. Only issuer, some changes are done in the ISO 8583 data element. So there is, we are using the existing infrastructure for this tokenization adoption as well. Yeah.
Okay, no, you're talking about frauds will be reduced with respect to this. Okay, what's the kind of a percentage of fraud what we are looking at, and how much can this reduce?
I feel 90% of fraud happens here in this. 90% of fraud, 90 to 95%, I can say fraud happens here in this here, because the merchant can be fraudulent. You are taking out your card, which is exposing your card number, card details. So, and maybe the acquirer processor is trying to steal your data. So 90% of fraud happens here. So I feel if you eliminate this kind of risk, where you are entering your card number on an e-commerce platform or using your real card number, taking out your credit card in front of others or any fraudulent entity, there is a possibility we can reduce 80 to 90% of frauds here.
Okay, so you're saying that there are a lot of fraud which happens with respect to the while we enter into an e-commerce site, or otherwise when we swipe the physical card.
Yes.
Okay.
That's true.
And what will be the residual fraud which is there with respect to tokenization? Is there any residual fraud which is possible?
Yes, it is possible. If the your Apple Pay wallet is unlocked, you lost it, still the token can be used. I feel that is the way. And in case of wearables, yes, there is a possibility. If you lose your wearable or payment rig, payment sticker, or your watch strap, if you lose it, there is a possibility of using it for fraudulent transactions. Yeah.
So that is a different kind of a fraud, but the transaction fraud, which is where the issuer is at risk. Some of the transactions which we are talking as with respect to issuer is also at risk. Whereas if I lost my card or I lost my wallet, wallet in the sense I'm talking about digital wallet, okay, or I lost my particular mobile, then that is a very different kind of a fraud.
Right.
Which cannot be really controlled.
Okay.
So what is the residual fraud which the tokenization is still having?
Okay, so there can still be bin attacks. I feel if the token bin range is exposed, there can still be the bin attacks, and the fraudulent entity can identify the bin ranges, and they can try to do the transactions using that. But still, I feel it's really very difficult because to hack this, they have to hack this TCP/IP protocol, go inside it, take the token, and also this token basically does not have any extrinsic meaning that can be used on other devices. So I feel there is still very less amount of fraud, and it is I think close to 100% secure.
Yeah, close to 100%.
Yeah.
What is that?
Nothing
Which is still there?
nothing is 100% secure in the card payments, basically. Yeah. So we started with MaxSwipe, then came to EMV, and then we have to do this tokenization. Yeah. So I feel nothing is still 100% secure.
Okay. 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 Consider that I changed last question. Consider that I tokenized my card using Google Pay, let us take, and then I decided to buy a new phone and changed it. What will be the kind of a flow which happens, and how do I really see that my card is still protected even though I have two devices?
So each token is device bound. So if you have a different phone, when you do the token provisioning, the token information, your device ID, basically your device fingerprint information is being sent to TSP, and TSP records it. So even
Can you
if
go to that flow? That is what I wanted to see. Can you go to that flow?
This one? Or one
No,
more?
not this, not this, the previous one, if it is. Yeah, this is where the eligibility check comes.
Yes.
Is this the one? So,
Yes.
no, or the previous one, the token request.
Token. No, this is the first issuance step basically, where cardholder is entering his PAN details.
Hmm.
And the
So what
eligibility.
information is shared about my mobile or about
So
my device?
Yeah. So device fingerprinting information can have your token basically requester ID, which wallet your token is being requested from. Is it Apple Pay, Samsung Wallet, or Google Pay? Then it will have your device basically version. It's a
Not only
Samsung
the
Galaxy, which kind of
sorry,
sorry.
sorry to interrupt. Not only the wallets, but also you have a merchant where we can store the information. So
Yes.
what information? Because that's a laptop or something I would have used.
Mhm.
So what is the information which I am sharing in that particular case?
Okay, in the card on file tokenization, you mean? Where I am using a card on an e-commerce merchant, where first time definitely I have to enter my card number, which is then we have to assume it is securely transmitted from the merchant to the acquirer and then to the TSP first time for the provisioning. And once they generated token and send it back, the card number definitely is not stored. The token is stored in the at the merchant card on file merchant. So that token is then used for the subsequent transactions.
So that token is different to this token, correct?
Yes. Yes.
Okay. Yep. Thank you. Thank you very much.
Thank you.
Thank you so much, Manish, for your
Thank you.
presentation. So that concludes our presentations for today. Let me thank everyone here. And we have 4 or 5 presentations scheduled tomorrow as well, same time. So I would request all the participants and audience to be present for this event tomorrow as well. Let me thank once again to all of you. Have a great day ahead. I'll just request Sriram sir and Chandra sir to stay here, and others, again, thanks once again. See you tomorrow. Bye-bye.
Thank you.
Thank you. Thank you, everyone.